Welcome to Milk Market Tidbit for the February milk production report that the USDA released on Friday afternoon. This is Dr. Lawrence Jones, and I'm recording this on Sunday, March the 23rd. So as usual, the milk production report is our first report of the month that kind of gives us an idea of what's been going on in February. Now Monday, we're going to get the cold storage report, and then in 2 weeks, we're going to get the dairy products report. So this is a slide from the Federal Milk Marketing Order tidbit that I did, and where I was suggesting that we ought to be up about 1.6% month over month, because that's basically what USDA generally has. So going into this report, this is where we had milk up about a pound, cows up about 7,000, and then daily production up at 1.6. But what did we get? Well, what we got was a lot of surprises. So first off, some significant revisions in January. The biggest one was 35,000 cows added. Now 35,000 change is outside of USDA's normal standard deviation, so that was quite the anomaly. And then we had an increase of about 2 million pounds a day, 2.5 million pounds a day of production because of those cows. So first thing is that the month over month was 2.4%, which was a very strong print for USDA. So it was a difference from the history of about 0.8, and that's about as far as they ever deviate from what the history has been. StoneX actually had the milk per cow about right. They were figuring that production had recovered in California, but like me, they were surprised by these cow numbers. So again, we ended up just very, very strong on that. Overall, we're about 9.4 million cows. That's exactly where my rolling demand suggests we need to be to meet the disappearance. We're up 62,000 cows from a year ago, but again, we were really in a low point. Now, one of the things that I want to point out is that going up 62,000 cows is only 0.6%, so it's less than a 1% change. And I still calculate that our replacements are about 0.74 per cow. So that's going to give us a 37% replacement rate. Of course, our slaughter data, we got to take the deads off. So we take 7 off of that, more or less, and that says we can have a 30% slaughter rate and maintain herd size. But we've been pushing clear down here to 29%. And again, if you think about 0.6%, the difference between 30 and 29 is enough to build up about 60,000 cows over a year. The latest data is 4,000 cows less than a year ago. We were about 59, we're 55 now. You know, at that same time, we've called about 312,000 cows fewer than we did the previous 12 years. So there are heifers, there are replacements, but just not enough to expand this herd significantly. So one of the questions I had is, where did this herd really start expanding? And it was actually right here where this arrow is pointing. So what I've done now is move this red box down and say, anytime we're in this red box, the herd ought to be expanding. So again, we're very much in expansion mode down here at the 28.5% cull rate. Look at the big picture. This is the daily milk production. Again, we were on a very strong upward trend. We've kind of got off of that. But again, you look at this, say, well, maybe this point ought to be on that long-term trend, and then this trend is now actually, increasing about the same rate. And so that's one of the things we have to kind of keep an eye on, is production really starting to ramp up again after about 2 years of fairly stable production. Or was this an anomaly based on how poor production was in the last couple months? If we look back at that federal milk marketing data, this is how things change. Again, there's lots of depooling or pooling, whichever way you want to call it. The blue is the federal milk marketing data. The orange is USDA. Now, one of the things I did notice in here is if we go back to February of 21, February of 22, February of 23, about February of 24, February is our highest month over month numbers. And so that is the spring flush. kind of taking hold. And so the question is this going to settle back into its a normal pattern after this? But using all this data, we can say that about 71% of the milk in the country was actually pooled last month. That was quite a bit lower in the 60s. Big question is milk per cow. And again, we were on this huge upward trend. And I would say we still are pretty much in a flat scenario for February. So we've not significantly changed in the last 3 years what the milk per cow has been. However, when you look at milk per cow, you've also got to look at fat. And right now, my prediction for the agricultural prices would be down about 3 ticks to 4.43. If we get that, then the month over month fat number is going to be up 1.7. If you look at year over year, it's really strong. So that's going to probably overshadow what the milk per cow is doing, these high components. This was the milk production report. Now, next week, we're going to get the cold storage report on Tuesday, and then we won't get the dairy products report until 2 weeks from this last Friday. But I will get you another milk market tidbit for that cold storage report.